What we see this day is a world where geopolitics, analyst nerves, and technology execution all collided in one ugly little tumble for server stocks, and supermicrocomputer, SMCI, was right in the crossfire. Shares slid about 4% in late-morning trading after Citi's Aussie merchant cut her 12-month price target. SMCI fell roughly 4.2% to $31.28 in late-morning trade on Tuesday. Broad market turbulence was driven by fresh tariff threats from the White House related to Greenland, headlines that rattled risk assets across the board. Reuters and other outlets covered the story extensively. Morgan Stanley downgraded the North American IT hardware sector to cautious, flagging cooling demand, ballooning input costs, and what it called a perfect storm for margins and orders. SMCI's own story, delivery/configuration delays caused roughly $1.5 billion of revenue to shift into the December quarter, and management guided Q2 revenue of $10 to $11 billion. What I observe is that an analyst target change matters for two reasons: signal and scale. First, analysts are shorthand for the market's narrative. A cut from $48 to $39, even with a hold, subtly says, we think upside is pared back, and that reduces the margin for error for short-term traders. Second, SMCI is a headline-sensitive stock. It gets bought on AI optimism and sold on risk-on headlines. Drop the anchor, an analyst trim, during a risk-off day and the boat tilts. That's exactly what happened. Imagine a wildly popular band loses one of its backup singers the week before a stadium tour. Ticket pre-sales don't crash, but it's enough to make some late ticket buyers hesitate, and on a soft pre-sales day, hesitation looks like panic. You might be wondering, tariffs? Greenland? How does that make server stocks shiver? Short answer, markets hate uncertainty, especially uncertainty that can add costs to global supply chains or trigger retaliatory measures. President Trump's tariff threats tied to Greenland stoked fears that trade flows between the US and Europe could face new frictions, and that kind of geopolitical drama makes corporate buyers pull in their horns on big IT purchases. Reuters and other outlets summarized the market reaction well. Servers and data center equipment are bought in huge lots and scheduled months ahead. If a CFO thinks there's a risk of tariffs, currency swings, or broken logistics, the easiest lever to pull is delay the purchase order. The result is fewer orders hitting companies like SMCI in the near term, which is what investors worry about when headlines flare. If you run a restaurant and the cost of imported cheese might double next month because of a diplomatic spat, you postpone the big renovation and the new pizza oven purchase. That small procurement delay cascades. Morgan Stanley's perfect storm: why hardware got downgraded. What I see in the Morgan Stanley call is a neat summary of what keeps me up at night when analyzing server vendors: demand fuzziness plus rising input costs plus rich valuations equals squeeze. Morgan Stanley put North American IT hardware on cautious because their checks showed weakening enterprise budgets, rising component costs, memory, silicon, networking, and valuations that assumed the boom would continue unbroken. When you combine those three factors, margin pressure becomes not just a theory but a probable reality. It's like betting a fancy bakery on triple chocolate croissants right as flour and cocoa shoot up in price. You either raise prices and risk demand, or hold margins and lose profits. Not great. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. What I observe across the tape is that AI and server pure plays are high beta assets. They go up fast in euphoria and down fast in fear. We saw Nvidia slide roughly 3.5% and traditional server vendors like Dell and HPE fall 5 to 6% on the same headlines. When traders search for hedges, these high beta names are often the first to be trimmed. As Jim Carroll from Ballast Rock put it, the reaction is noticeable but not existentially catastrophic, yet. These are the carnival rides of the stock market, thrilling on the way up, stomach churning on the way down. You want to know how easily the operator can stop the ride. In this case, global macro can yank the emergency brake. This is the part we keep returning to. SMCI's recent quarterly hiccup wasn't because demand vanished, it was because the product they're building is complex. The company said configuration and design upgrades for high-end GPU racks, last-minute customer changes for AI systems, delayed shipments, pushing about $1.5 billion of revenue into a later quarter. That's big timing noise. Importantly, management also guided Q2 revenue of $10 to $11 billion, implying the company expects the backlog to arrive, but timing matters to investors. SMCI was building a custom supercar for a big client. The client decided to swap engines and brakes at the last minute. Suddenly delivery slips, the factory's monthly revenue shifts, and investors looking at the calendar get nervous even though the sale hasn't evaporated. Why revenue timing can be mistaken for weakness. Here's the behavioral finance part that enjoys torturing investors. When revenue moves from one quarter to another, some traders treat it like a loss of demand, others treat it as a scheduling hiccup. The truth is almost always somewhere in the middle. If the deferral stems from configuration upgrades that increase ticket price or margin later, awesome. If it's because customers are rethinking purchases, not great. SMCI has insisted this was the former, complexity of upgraded GPU racks, and that the orders remain real and large. The market's job is to decide whether to believe them. If your neighbor delays closing on a high-end house because they want marble floors instead of laminate, you can still expect the sale, but your monthly cash flows shift. For a company, cash flow timing is everything to valuation. One of the things I have observed, and investors should note, is that high-beta hardware names recover quickly when the clouds part. If the tariff headlines calm, or if one or two brokers step in with optimistic notes, SMCI's shares would likely rebound sharply, simply because the underlying demand story, AI racks, hyperscaler orders, is still intact. Conversely, if trade tensions escalate into meaningful tariffs or if procurement freezes set in, then the downdraft becomes longer and more painful. The day-to-day is therefore a battle between headline risk and order reality. Think of risk like a storm over a solar farm, a few clouds and the output dips, a passing storm and the sun returns full blast. Investors are debating whether this is a passing shower or a seasonal monsoon. If I were trading SMCI, here's the focused watch list I'd have up on a second monitor. Will other brokers follow Citi with downgrades or target cuts? Momentum matters, and a band of downgrades can keep a stock pinned down. Are big AI infrastructure orders continuing to show up? If hyperscalers or OEM partners confirm continued purchases, that's good. Macroeconomic calendar, specifically PCE on January 22, the Fed's preferred inflation gauge, and S&P Global's flash PMI on January 23, any surprise could shift risk appetite broadly and affect big-ticket IT buying. SMCI's Q2 earnings release, the obvious one. Management's tone on backlog conversion, margins, and pricing will be determinant. Analysts expect EPS $0.39, a QOQ decline, so beats/misses will create big swings. Note this as well. Do you want peace at heart? John 1:29 tells us that, the next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this, I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, You greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.